Let's talk today about Braveheart Bio and its potential NASDAQ debut. In this pre-IPO institutional report, we'll review the company's business, products, management team, financial performance, competitive positioning, key risks, and long-term investment potential. Pre-IPO Institutional Research Report. NASDAQ, BRVE, proposed, Braveheart Bio, Inc. An ex-Hio Bio CEO's $65 million bet to dethrone Bristol Myers in heart disease.
Section 1. Executive Summary. Braveheart Bio, Inc. is a San Francisco-based clinical-stage biopharmaceutical company developing therapies for hypertrophic heart muscle disease, HCM, a serious heart muscle disease, which filed for a proposed NASDAQ Global Market IPO under the ticker BRVE on July 14, 2026. As of this report's date, the company is not yet publicly traded and has not yet disclosed a share price range, number of shares to be offered, or a specific listing date. The S-1 filing states only that Braveheart intends to raise up to approximately $100 million. In plain terms, Braveheart is going after one of the hottest rivalries in cardiovascular medicine right now. Its lead drug, BHB 1893, belongs to a class of medicines called cardiac myosin inhibitors, which work by calming down an overactive heart muscle that squeezes too hard in HCM patients. Think of a garden hose being pinched, forcing the heart to pump harder than it should. Bristol Myers Squibb's Camzyos was the first such drug approved in 2022, and Cytokinetics' rival drug, now approved and branded Mycorrhiza, has already begun challenging it commercially. Braveheart is betting that its licensed compound, originally developed by China's Jiangsu Hengrui Pharmaceuticals, can eventually outcompete both on speed of effect, safety, and ease of use for doctors and patients. Braveheart did not discover BHB 1893 itself. The company licensed exclusive rights outside of Greater China from Hengrui in September 2025, with $65 million upfront, with more than $1 billion in potential milestone payments, and all clinical data generated so far, Phase 1 and Phase 2 trials, plus an ongoing Phase 3 trial in obstructive HCM, were designed, run, and sponsored entirely by Hengrui, primarily in China, with one Phase 1 study conducted in Australia. Braveheart itself has not yet run a single clinical trial of its own. Its own global Phase 3 program is planned to begin in the second half of 2026, OHCM, and the first half of 2027, NHCM. Key facts at a glance. Lead candidate, BHB 1893, an oral cardiac myosin inhibitor for obstructive and non-obstructive hypertrophic heart muscle disease. Origin of drug. Licensed ex-Greater China from Jiangsu Hengrui Pharmaceuticals, September 2025, with all trials to date run by Hengrui. Direct competitors. Bristol Myers Squibb's Camzyos, approved in 2022, and Cytokinetics' Mycorrhiza, aficamten, recently approved. Braveheart's own clinical progress, none yet. Global Phase 3 trials planned to start 2H 2026, OHCM, and 1H 2027, NHCM. FY 2025 net loss, $66.1 million. Q1 2026 net loss, $14.3 million. Accumulated deficit, March 31, 2026, $80.3 million. Pre-IPO funding, $185 million Series A in 2025, led by Andreessen Horowitz, Forbion, and OrbiMed. This report is intended to give both professional and retail investors a clear-eyed, plain English view of Braveheart's science, its financial position ahead of its public listing, and the key risks and catalysts likely to matter over the next 12 to 24 months. It is not a recommendation to buy, sell, or hold BRVE shares.
Section 2. Investment Thesis. The bull case for Braveheart centers on two things: A management team with a genuine track record of value creation, CEO Travis Murdoch previously founded and sold HI Bio to Biogen for up to $1.8 billion, and a drug candidate entering a cardiovascular disease market that has already been clinically and commercially validated by two other companies. Braveheart isn't trying to prove a new biological mechanism works. Cardiac myosin inhibition is already an approved, reimbursed, multi-hundred-million-dollar drug class thanks to Camzyos and now Mycorrhiza. Braveheart's bet is narrower and arguably lower risk than a typical first-in-class biotech story. Can BHB 1893 differentiate itself well enough on speed, safety, and dosing convenience to take meaningful share in a large and growing market? The bear case is equally clear. Braveheart is entering a fight against Bristol Myers Squibb, one of the largest pharmaceutical companies in the world, and Cytokinetics, which has spent nearly 3 decades in its entire company strategy building toward this exact commercial moment. Braveheart itself has never run a clinical trial. Every piece of data supporting BHB 1893 to date comes from Hengruy's own trials in China, conducted under different regulatory oversight and, per the company's own disclosure, without Braveheart's involvement in trial design or conduct. The company's own pivotal U.S. trials haven't even started yet, and going public with no price range or share count disclosed this close to a target raise suggests the offering terms, and possibly the timeline itself, remain genuinely unsettled. Thesis in one sentence. Braveheart offers exposure to an already validated cardiovascular drug class with a proven management team and promising overseas data, but the company has yet to run a single clinical trial of its own, and is walking into a fight against a big pharma incumbent and a determined, similarly positioned public competitor.
Section 03. Company Overview. Corporate Milestones. Legal Entity. Braveheart Bio, Inc., Delaware Corporation. Headquarters. 1 Letterman Drive, Building A, Suite A4, 300, San Francisco, California, 94129. Exchange/ticker, NASDAQ Global Market, BREVE, proposed. Year founded, 2024. Chief Executive Officer, Travis Murdoch, MD. Chief Financial Officer, J. Paul Ritchie. Employees, approximately 30 per third-party aggregator data. IPO filing status, Form S-1 filed July 14, 2026. No price range, share count, or listing date yet disclosed. Underwriters: Goldman Sachs & Company, LLC, Jefferies, TD Cowen, Stifel, Cantor. Date: Milestone, 2024. Braveheart Bio founded. September 4, 2025. Licenses ex-Greater China rights to HRS 1893, later renamed BHB 1893, from Jiangsu Hengrui Pharmaceuticals for $65 million upfront, $32.5 million cash, $32.5 million stock, plus a $10 million near-term milestone and more than $1 billion in further potential milestones. November 2025. Announces a $185 million Series A financing led by Andreessen Horowitz, Forbion, and Orbimed, with participation from Innovate Sciences and Fraser Life Sciences. Late 2025, presents Phase 1 data generated by Hengrui at the European Society of Cardiology Conference 2025. July 14, 2026. Publicly files Form S-1 with the SEC for a proposed NASDAQ Global Market IPO under ticker BREV, targeting up to approximately $100 million. No pricing terms disclosed. Second half 2026 planned. Braveheart intends to initiate its own global Phase 3 trial in obstructive HCM, Lionheart HCM. First half 2027 planned. Braveheart intends to initiate its own global Phase 3 trial in non-obstructive HCM,
Nobleheart HCM. Section 4. Business Model. Braveheart operates the classic clinical stage biotech business model. It has no product revenue and funds all of its operations through capital raised from investors, first via its $185 million Series A round and now via its proposed IPO. The company's entire strategy is built around a single core decision. Rather than discover a new drug from scratch, Braveheart identified an already promising, clinically validated compound overseas, Hengru's HRS-1893, developed and tested in China, licensed the rights to develop and sell it everywhere except Greater China, and is now using its Western capital markets access and regulatory expertise to run the global trials needed for approval in the US and other major markets. This China-to-West licensing model has become increasingly common in biotech over the past 2 years, as Chinese pharmaceutical companies like Hengru generate high-quality, lower-cost clinical data on promising molecules, which Western biotechs then license in advance through FDA-focused development. Braveheart's own leadership has direct experience with this playbook succeeding financially. CEO Travis Murdoch previously built HI Bio around a similar strategy before its $1.8 billion sale to Biogen. How to think about it? Braveheart isn't a drug discovery company. It's a drug development and commercialization company that bought its way into a promising, already partially de-risked cardiovascular asset. The upside is skipping years of early discovery risk. The downside is that Braveheart is fundamentally dependent on data generated by someone else, under trial conditions it didn't design or control.
Section 5. Products and Services. BHB 1893, a next-generation cardiac myosin inhibitor. Hypertrophic cardiomyopathy is a disease where the heart muscle becomes abnormally thick, and in the obstructive form, OCHM, that thickened muscle partially blocks blood flow out of the heart, like a kink in a garden hose. Cardiac myosin inhibitors, the drug class BHB 1893 belongs to, work by reducing the excessive contraction of heart muscle fibers, easing that obstruction and allowing blood to flow more normally. BHB 1893 is designed to deliver a rapid and deep reduction in that obstruction, measured as the LVOT gradient, while minimizing unwanted effects on the heart's overall pumping ability, systolic function, a key safety consideration for this entire drug class, since reducing heart contraction too much can be dangerous. Braveheart's core differentiation argument versus Camzyos rests on 4 claimed attributes: faster onset of effect, a lower cost to the heart's ejection fraction, meaning less risk of oversuppressing heart function, more predictable drug metabolism without major interactions via the liver's CYP enzyme system, a known complication for Camzyos, which requires frequent monitoring and dose adjustments, and a simpler dose titration process intended to broaden real-world adoption among prescribing physicians who have found Camzyos's REMS, or Risk Evaluation and Mitigation Strategy monitoring requirements, burdensome. Pipeline. Program. Indication. Status. BHB 1893 in OCHM. Obstructive hypertrophic cardiomyopathy. Phase 1/2 data generated by Hengru in China, Braveheart's own global Phase 3 trial, tentatively planned to start 2H 2026. BHB 1893 in NCHM, non-obstructive hypertrophic cardiomyopathy. Phase 2 data generated by Hengru showing statistically significant improvements in cardiac biomarkers and diastolic function versus placebo. Braveheart's own global Phase 3 trial, tentatively planned to start 1H 2027. In China, Hengru is separately running its own Phase 3 trial of the same underlying compound, HRS-1893, in OCHM, a trial Braveheart does not control, whose eventual results could provide additional supportive data for BHB 1893's global development program. Section 6. Industry Overview. The cardiac myosin inhibitor class is one of the newest and most closely watched areas of cardiovascular medicine. Bristol-Myers Squibb's Camzyos, mavacamten, approved by the FDA in 2022, became the first drug to directly target the underlying muscle mechanics of obstructive HCM, generating $296 million in a single recent quarter, in demonstrating that physicians and payers are willing to adopt a novel, closely monitored therapy for this disease. Cytokinetics has since brought its own competitor, aficamten, branded Mycorrhiza, to market, with its Phase 3 data showing benefit not just in obstructive HCM, but also, more recently, in the non-obstructive form of the disease, an indication where no cardiac myosin inhibitor had previously demonstrated success, opening what Cytokinetics has described as a multi-billion-dollar incremental market opportunity. This is also part of a broader, increasingly important trend in biotech. Western companies licensing clinically advanced drug candidates discovered and initially tested in China. Hengrui Pharma alone has struck multiple such deals recently, including a $500 million upfront agreement with GSK. Braveheart, alongside companies like Calera Therapeutics, which built its obesity drug franchise the same way and had a record-setting biotech IPO, represents a growing category of China-sourced, US-developed biotech IPO candidates that investors are increasingly having to evaluate on their own emerging track record.
Section 7. Market Opportunity. Hypertrophic cardiomyopathy affects more than 700,000 people in the United States, with diagnosed prevalence projected at approximately 196,000 obstructive HCM patients and 145,000 non-obstructive HCM patients in 2026, according to figures cited in Braveheart's own IPO filing. Critically, Cytokinetics executives have publicly estimated that even Camzyos, the first and most established drug in the class, is currently used in only about 15 to 20% of eligible obstructive HCM patients, suggesting the existing market remains significantly underpenetrated, with real room for both currently marketed drugs and new entrants like BHB 1893 to grow overall category usage, not just fight over existing prescriptions. The non-obstructive HCM opportunity is a particularly interesting recent development. Cytokinetics Mycorrhiza recently demonstrated statistically significant benefit in a Phase 3 NHCM trial, a population where no cardiac myosin inhibitor had previously shown clear success, and where Camzyos is not approved. Braveheart's own NHCM Phase 2 data, generated by Hengrui, similarly showed improvements in this same underserved population, positioning BHB 1893 to potentially compete for this newly validated additional market segment if its own Phase 3 trial succeeds. How to think about the opportunity. This is a genuinely large and still underpenetrated market opportunity with real precedent for commercial success, but Braveheart would be the third entrant into a category where the first two competitors already have years of head start, real trial data in Western regulatory hands, and, in Cytokinetics' case, an approved product actively being marketed. Section 8. Competitive Landscape. Company, Product, Status and Positioning. Bristol-Myers Squibb, Camzyos, mavacamten, first approved cardiac myosin inhibitor, 2022, generates hundreds of millions in quarterly sales, requires REMS monitoring that some physicians find burdensome, used in an estimated 15 to 20% of eligible OHCM patients per Cytokinetics' own estimate. Cytokinetics, Mycorrhiza, aficamten, recently FDA-approved rival to Camzyos, explicitly positioned around a differentiated, less challenging REMS and label, has also demonstrated Phase 3 success in non-obstructive HCM, a population Camzyos does not address, backed by nearly 3 decades of company strategy built toward this exact commercial moment. Braveheart Bio, BHB 1893, third entrant, not yet in Western Phase 3 trials, claims potential best-in-class profile on speed, systolic safety, predictable pharmacokinetics, and simplified titration, based on data generated by its Chinese licensing partner. Where Braveheart stands. CEO Travis Murdoch has been direct that the current standard of care leaves room for improvement, and Braveheart's entire competitive thesis rests on out-executing two well-resourced rivals on drug profile rather than being first to market. This is a considerably higher bar than being a first-in-class innovator, since Braveheart must not only demonstrate its own drug works in Western trials it hasn't yet started, but must also do so with a differentiated enough profile to convince physicians to switch from or choose over two established, well-marketed alternatives. Notably, Cytokinetics has stated that it does not view itself as directly competing with Camzyos, so much as expanding the overall market, a dynamic that could work in Braveheart's favor if the category continues growing, or could equally mean three well-funded competitors all fighting for share in what remains, for now, a single approved drug class.
Section 9. Management Team. Travis Murdoch, MD. Chief Executive Officer, President, and Director. Brings more than 15 years of leadership experience in biopharmaceuticals and clinical medicine. Previously founded and served as CEO of Human Immunology Biosciences, Inc., HIBio, a precision immunology company acquired by Biogen in 2024 for up to $1.8 billion. Following the acquisition, Murdoch joined Biogen's leadership team, guiding its West Coast hub through multiple Phase 3 trial initiations for HIBio's lead program, felzartamab. Previously a partner at Monograph Capital and an investor with SoftBank Vision Fund. Is a trained gastroenterologist and internist who has worked with northern communities in Canada and is also a co-founder and board member of Allen Biosciences, Inc. Murdoch has publicly framed current HCM treatment options as leaving room for improvement and has stated Braveheart sees potential for our investigational cardiac myosin inhibitor to be a best-in-class molecule. J. Paul Rickey, Chief Financial Officer. Deep experience across private and public company operations, finance, corporate development, and strategic planning, with a specific track record in early-stage financing, reverse mergers, IPOs, and M&A. Previously served as CFO of Alpine Immune Sciences, Inc. from 2017 through its $4.9 billion acquisition by Vertex Pharmaceuticals in June 2024. Direct, relevant experience shepherding a clinical-stage biotech through a major value-creating transaction. Investor Syndicate. Braveheart's $185 million Series A financing was led by Andreessen Horowitz, Forbion, and OrbiMed, with additional participation from Innovate Sciences in Frazier Life Sciences, a syndicate of well-established life sciences investors whose participation lends credibility to the company's strategy in valuation ahead of the IPO. Section 10. Financial Performance. Metric. FY 2025, year ended December 31, 2025, Q1 2026, 3 months ended March 31, 2026. Revenue. $0. Pre-commercial. $0. Pre-commercial. Operating loss. Negative $66.7 million. Information not publicly available as a standalone figure in this source set. Net loss. Negative $66.1 million. Negative $14.3 million. Accumulated deficit. Information not publicly available as of December 31, 2025, specifically. $80.3 million as of March 31, 2026. In plain terms, Braveheart has no revenue, as is typical for a clinical-stage biotech that hasn't brought a drug to market. The company burned through $66.1 million in 2025, largely reflecting the $65 million upfront payment to Hengrui for the BHB 1893 license, plus early R&D and operating costs, and continued spending at a $14.3 million per quarter pace in the first 3 months of 2026 as it geared up for its Phase 3 program and IPO process. Since substantially all of this spending reflects licensing and early-stage R&D/G&A costs, the company has no clinical trials of its own running yet. Investors should expect this burn rate to increase materially once Braveheart's own global Phase 3 trials begin in the second half of 2026. Capital raising history. Braveheart has been funded entirely through its $185 million Series A round, completed in late 2025 and led by Andreessen Horowitz, Forbion, and OrbiMed. As of December 31, 2025, the company had issued 157,500,000 shares of Series A redeemable convertible preferred stock per its SEC filings. The proposed IPO, targeting up to approximately $100 million, would represent Braveheart's first public capital raise.
Section 11. Detailed Analysis. Latest Quarterly Financials. Q1 2026. Revenue. $0. Braveheart is pre-commercial and has never generated product revenue, consistent with its clinical stage status and the fact that its own pivotal trials have not yet begun. Gross margin, operating income, and EPS. Not meaningful/not applicable given the absence of revenue. Standalone Q1 2026 operating income and diluted EPS figures on a comparable post-IPO share count basis. Information not publicly available as of this report's date, since the company's capital structure will change materially upon IPO completion and conversion of its Series A preferred stock. Net income. Net loss was $14.3 million for the 3 months ended March 31, 2026. This reflects ongoing R&D spending to prepare for the company's global Phase 3 program and general and administrative costs, including expenses associated with becoming a public company. Cash flow and balance sheet. Detailed standalone cash flow statement figures and cash balance as of March 31, 2026, information not publicly available in the specific sources reviewed for this report, beyond the net loss and accumulated deficit figures cited above. Readers should consult the complete Form S-1 financial statements on SEC EDGAR for the full cash flow and balance sheet detail. The company's accumulated deficit of $80.3 million as of the same date is discussed in Section 10. Guidance. As a pre-IPO clinical stage biotech, Braveheart has not issued formal revenue or earnings guidance. Management's forward-looking commentary centers on clinical and regulatory milestones, initiating the global Phase 3 OCHM trial, Lionheart-HCM, in the second half of 2026, and the global Phase 3 NOCHM trial, Nobleheart-HCM, in the first half of 2027. Management commentary. CEO Travis Murdoch has stated that current HCM treatment options leave room for improvement and that Braveheart sees potential for our investigational cardiac myosin inhibitor to be a best-in-class molecule that enhances the efficacy, safety, and convenience of care for patients and prescribers. Management's stated use of IPO proceeds centers on advancing BHB 1893 through Phase 3 trials in both obstructive and non-obstructive HCM, funding R&D personnel in clinical operations overhead and general corporate purposes. Key changes versus previous quarter. The company continued to prepare for its IPO process during the quarter, culminating in the public S-1 filing on July 14, 2026. Net loss of $14.3 million for Q1 2026 represents a run rate that, if sustained across 4 quarters, would suggest full-year 2026 losses in a broadly similar range to 2025's $66.1 million, though losses are expected to increase once the company's own Phase 3 trials begin enrolling patients in the second half of the year. Accumulated deficit grew to $80.3 million as of March 31, 2026, up from the $66.1 million net loss recognized for all of FY 2025, reflecting continued cash burn into the new fiscal year. Section 12. Growth Drivers. Successful initiation and progress of global Phase 3 trials. Successfully launching the Lionheart HCM and Nobleheart HCM trials on schedule and generating positive interim safety data would be critical early de-risking events validating Braveheart's ability to independently execute clinical development. Positive readout from Hengrui China Phase 3 trial. Since Hengrui is running its own Phase 3 trial of the same underlying compound in China, a positive readout there, even though it wouldn't be a Western regulatory trial, could provide meaningful supportive data ahead of Braveheart's own pivotal results. Continued underpenetration of the existing market. With Camzyos reportedly used in only 15 to 20% of eligible OCHM patients, substantial room exists for overall category growth that could benefit a differentiated new entrant without requiring Braveheart to displace existing prescriptions entirely. Management's demonstrated track record. CEO Travis Murdoch's prior success building and selling HI Bio to Biogen for up to $1.8 billion, and J. Paul Rickey's experience shepherding Alpine Immune Sciences through its $4.9 billion sale to Vertex give Braveheart's leadership real credibility with investors and potential future acquirers. Non-obstructive HCM market expansion. Cytokinetics' recent Phase 3 success in NHCM validates this as a real, addressable market. A similarly successful Braveheart NHCM trial would open a second, largely untapped commercial opportunity. Section 13. Key risks. A Braveheart has never run its own clinical trial. Every piece of clinical data supporting BHB 1893 to date was designed, sponsored, and conducted by Hengrui Pharma, primarily in China, with the company explicitly disclosing it was not involved in the design, conduct, or oversight of those trials. Results generated under different regulatory, population, and operational conditions may not replicate in Braveheart's own global Phase 3 program. An intensely competitive, established market. Braveheart would be the third entrant into a category already served by Bristol-Myers Squibb's approved commercially successful Camzyos and Cytokinetics' newly approved Mycorrhiza, both well-resourced competitors with years of head start in real Western trial and commercial data. No disclosed pricing terms. As of this report's date, Braveheart has not disclosed a share price range, number of shares to be offered, or a specific listing date, meaningfully limiting investors' ability to assess valuation or timing with precision ahead of the offering. A substantial and accelerating cash burn. Net losses of $66.1 million in FY 2025 and $14.3 million in Q1 2026 alone, with an accumulated deficit of $80.3 million as of March 2026, are expected to increase further once the company's own Phase 3 trials begin enrolling, a substantially more expensive undertaking than the pre-trial period reflected in current financials. China origin licensing and geopolitical risk. BHB 1893 was discovered and developed by a Chinese pharmaceutical company, and all trial data to date originates from China and, to a lesser extent, Australia. Evolving U.S.-China trade and regulatory relations, potential FDA scrutiny of foreign trial data quality or comparability, or licensing-related complications could all introduce risks specific to this China-to-West development model. A REMS and safety monitoring class risk. Cardiac myosin inhibitors as a drug class carry systolic function safety risks requiring careful monitoring. Even Braveheart's claimed advantages in this area remain unproven in its own trials, and any safety signal in Phase 3 could be particularly damaging given the class's known risk profile. Execution risk on an ambitious timeline. running two separate global Phase 3 programs, OHCM starting S2 2026 and NHCM starting S1 2027, simultaneously with a company of Braveheart's current scale, about 30 employees, represents a substantial operational undertaking with real execution risk. IPO not yet priced. As of this report's date, Braveheart's IPO has not yet been priced, and no specific listing date has been confirmed. Final offering terms, timing, and proceeds remain subject to change based on market conditions.
Section 14. Valuation. Metric. Value. Target IPO proceeds. Up to $100 million. Price range. Not yet disclosed. Shares to be offered. Not yet disclosed. Pre-IPO Series A financing. $185 million, 2025. Upfront cost of BHB 1893 license. $65 million, plus $1 billion in potential milestones. FY 2025 net loss, $66.1 million. Traditional valuation metrics such as price to earnings or price to sales are not applicable to Braveheart given its complete absence of revenue and earnings. As with other pre-commercial clinical stage biotechs, the market will effectively be pricing BRVE based on the perceived probability of BHB 1893's eventual clinical and regulatory success in Western trials, the strength of its differentiation claims against Camzyos and Mycorrhiza, and the credibility of Braveheart's management team, discounted for the substantial multi-year development timeline that remains. Because Braveheart has not yet disclosed a price range or share count, this report cannot calculate an implied market capitalization or valuation multiple at this time. For context, the broader 2026 biotech IPO market has been notably strong. 13 biotech companies had priced IPOs so far in 2026 as of mid-July, raising a median of more than $300 million each, with a majority trading above their debut share prices, a considerably more favorable backdrop than in recent prior years, which could support a robust valuation for Braveheart if investor sentiment continues. Formal sell-side analyst coverage and price targets are not yet available for a company that has not disclosed offering terms or begun public trading. Information not publicly available for valuation metrics as of this report's date.
Section 15. Upcoming catalysts. Catalyst. Expected timing. Why it matters. Disclosure of IPO price range and share count. Information not publicly available. Expected ahead of pricing. Will allow investors to calculate implied valuation and assess deal terms for the first time. IPO pricing and NASDAQ trading debut. Information not publicly available. First real market test of investor demand for the offering. Initiation of Lionheart HCM Global Phase 3, OHCM. Second half 2026 targeted. Braveheart's first independently run pivotal trial, a key operational and credibility milestone. Initiation of Nobleheart HCM, Global Phase 3, NHCM. First half 2027 targeted. Extends the pivotal program into the newly validated non-obstructive HCM market. Hengri's China Phase 3 OHCM trial readout. Information not publicly available. Would provide supportive, though not Western regulatory data on the same underlying compound. First post-IPO quarterly report. Information not publicly available. Will give investors their first standalone look at operating trends and cash runway as a public company. Section 16. Long-term outlook. Braveheart's long-term outlook depends on a sequence of events largely outside the company's control until its own trials begin. First, successfully launching and enrolling two separate global Phase 3 programs starting in the second half of 2026.
Second, generating data that both replicates Hengrui China results and demonstrates genuine differentiation against Camzyos and Mycorrhiza. And third, successfully navigating FDA review and ultimately commercial launch into a market where two entrenched competitors will have had a multi-year head start. If Braveheart's data support its best-in-class positioning, faster onset, better systolic safety, simpler dosing, the company could carve out a meaningful share of a large, still underpenetrated market, particularly given management's demonstrated ability to execute value-creating outcomes in prior ventures. If instead, BHB 1893's Western trial results disappoint relative to the China data or fail to clearly differentiate from existing options, Braveheart would face a considerably more difficult commercial path as a Me Too third entrant in an already served market. The next 18 to 24 months, encompassing the IPO itself, the launch of both Phase 3 programs, and early enrollment progress, will be decisive in determining which of these paths the company is on.
Section 17. Bull Case. Bull Case Summary. Braveheart successfully completes its IPO on favorable terms, capitalizing on a strong 2026 biotech IPO market. Lionheart HCM and Nobleheart HM both launch on schedule and enroll efficiently. Western trial data replicates and potentially exceeds Henrui's promising China results, confirming BHB 1893's claimed advantages in speed, systolic safety, and dosing simplicity. The drug successfully differentiates itself against both Camzyos and Mycorrhiza, capturing meaningful share in a market where even the leading drug remains used in only 15 to 20% of eligible patients. And management, drawing on its demonstrated M&A and value creation track record, either builds Braveheart into a standalone commercial cardiovascular company or executes a lucrative strategic sale once pivotal data reads out. In this scenario, Braveheart could establish itself as a credible third player in a large, expanding cardiovascular disease market, generating substantial value for early public shareholders.
Section 18. Bear Case. Bear Case Summary. Braveheart's own global Phase 3 trials failed to replicate Henrui's China results or reveal safety signals not fully anticipated from the overseas data, given the well-documented risks of extrapolating trial results across different populations and regulatory environments. Even if the drug works, it fails to meaningfully differentiate from Camzyos and Mycorrhiza on the attributes that matter most to prescribing physicians, relegating BHB 1893 to a marginal Me Too position in a market already served by two established competitors. Substantial and accelerating cash burn, already $66.1 million in 2025 alone, forces dilutive follow-on financing well before any commercial revenue materializes. Bristol-Myers Squibb or Cytokinetics respond with pricing, marketing, or clinical strategies that further entrench their market positions before Braveheart's Phase 3 data even reads out. And broader biotech IPO market sentiment cools from its strong 2026 pace, compressing the valuation Braveheart can achieve. In this scenario, BRVE shares could underperform significantly as the market reprices the probability of successful differentiation sharply lower. Section 19. Final Investment Conclusion. Braveheart Bio offers a genuinely distinctive setup among clinical-stage biotech IPO candidates. Rather than betting on unproven, first-in-class biology, the company is wagering that it can out-execute two well-established competitors in an already validated growing cardiovascular disease market, backed by promising, if entirely overseas-generated clinical data, and a management team with a real, demonstrated track record of building and selling biotech companies for billions of dollars. That combination of lower biological risk and strong leadership credibility is a genuinely appealing setup relative to many earlier-stage, higher-risk biotech offerings. At the same time, investors need to be clear-eyed about what remains unproven,
Braveheart has never run a clinical trial of its own. Every data point supporting BHB 1893 comes from trials the company didn't design or control, and its actual pivotal Western trials haven't started. The company is entering a fight against Bristol Myers Squibb and Cytokinetics, both of which have real commercial products, established physician relationships, in years of head start. And as of this report's date, Braveheart has not even disclosed the basic terms of its own offering, leaving investors to evaluate the story without knowing what they'd actually be paying for it. Bottom line, Braveheart Bio is best understood as a differentiation bet on an already validated drug class, led by a credible management team, but one that remains entirely dependent on Western trial data the company has not yet generated. This report does not constitute a recommendation to buy, sell, or hold BRVE shares. Readers should review the complete Form S-1 on SEC EDGAR, including final pricing terms once disclosed, and consult a qualified financial advisor before making any investment decision.